What's up, guys? This is S&P Watch number 4, where I do some technical and fundamental analysis on the S&P's price action and set some price targets and expectations of the future. This is Joe catching BTC on Twitter. Let's get started. So I think the last time I was talking to you guys about the S&P, we were trading around here. We just sort of dipped into this liquidity pool, and we sliced completely through it. We also then sliced through the next liquidity pool, which was here, which I was really looking for us to bounce off, if I'm completely honest. I didn't take the long trade. I didn't want to long trade this at all. I was more looking to go short once we'd figured out direction, but it ended up bouncing off this really deep liquidity pool, pierced the 200 moving average, to come down here. And this is a good example of like the market's going to tend towards the highest point of liquidity, which ended up being here, because this has the strongest support and resistance just throughout the past few months. Obviously, the three peaks here, this nice turning point here once that impulse wave topped out, and then it turned support here, and managed to. This was a nice long squeeze here, but now. If you guys didn't know, I am in a short position. It's not a big position. Okay, let me start again. So my fundamental beliefs of the market are that, I wanted us to get to 3,300, if I'm completely honest, before we started seeing some sort of falter in the market and some downside. But, I went over this in the extension video of the S&P, going over the 2007 sort of market in comparison to the current sort of look of the market. And you guys, I'm sure you guys could probably see what else was going over it. There was quite a lot of similarities, in just the market structure. But that has happened in a couple of years. It happened in 2016. The market looked very similar. It happened in 2000. It looked quite similar. Sorry about that. This is the door. Again, so the market looked similar in 2000, 2016, 2007. But, so I want to be playing that trade. And that trade for me was coming back up from this low here and getting into the position at the 618 here, which happened to be this liquidity pool. So I had most of my position. I had three entries, one at this 618 here, which got filled. I had another one at this, which got filled, and then there's one deeper in this liquidity pool, which didn't get filled. So I'm 2/3 into the position. But I will say, I really don't like how strong this comeback was. But this is what you can be expected in a really strong bull market, which we are still in, technically speaking. There's no confirmation on any time frame that we're in a bear market at all. But I was looking to go short here and ride any downturn, because the fact that we sliced, we've tested this liquidity pool twice. On a larger time frame, we're still in this same short side liquidity pool, and the fact that we've sold off so hugely into it twice. For me, that looks like investors are dumping into this liquidity pool as much as they can. And again, the 2.618 from the 2008 crash was here. It's right bang on with this trend line. So for me, it's no surprise that we sold off here. But I honestly thought that this would be the selling power that we were looking for there, which people were getting into early, but that's not how it played out. We actually got all the selling power here, which is just investors dumping from this move in here. And then we get this other push up, to tap into that selling power, and the same thing happened again. So this is a lot of people dumping onto the open market. And so realistically now I'm looking for us to get further downside, but I will say that is going against my fundamental belief for the market, that we are going to get 3,300. With Trump's elections coming up, the 2020 elections, I just can't see the market faltering, or if anything, we're just going to range at this sort of price for even longer. I mean, we've been ranging here since February in 2018, which is pretty crazy. No, January in 2018. So we've now been ranging here for almost 2 years, coming up on 2020 Feb, if we're still here. So, if we are, that is a clear indication, guys, that we probably won't move up, and this is the top out of the market. But we'll have to see. But anyway, so I'm in a short position coming back to the retest of this liquidity pool and the 618. I'll have to see how that pans out. It is going against my beliefs, but it's too good a trade for me not to take. I'm looking to exit most of the position at the low here, and then the final chunk here. It's a really nice risk reward position. Really nice. You don't tend to get these sort of nice trade positions on the S&P, in my opinion, but I have today. So looking at about my bad, I've used the long position. I was wondering what I was saying, minus 56. Yeah, so it's a 3-to-1 trade, really lovely trade in the S&P. Nice interweek position. We might even get here quicker than I think. But again, so I'll be taking most of it here. I'll probably take a chunk out, depending on how slow we trade down. This going into the week, I'll try to look at the market and think, where we might be going. The extensions could look nicer, I won't lie, but we'll have to see. 1.69, 269. Alright guys, that's all from me. It's just a quick overview of what I'm doing and how the S&P is looking. But I'll probably have a more in-depth overview of the S&P coming into the end of the week, just because I want to see how this week pans out. Now we've hit a pretty important level in terms of decision time on the market. If you break above here, it's probably likely we're going to see 3,300. Anyway guys, thanks for watching, and I'll see you in the next one.